Well, the title is all eyes on the election. The election affects everything. It's really the dominating thing for the next 2 months. And once again, don't buy anything based on these recommendations. This is all legal. So we got rid of the So as I say, U.S. elections will drive the markets in November. God knows what's going to happen. And like we said before, the markets are priced in a Hillary win. So if that happens, you shouldn't expect too much excitement. Now there might be a nice rally the next day or something like that. But you know, if it's they know it's going to happen, it's already the market's already adjusted. So watch the few days before the election, like the week before, the Monday before. See where the market is moving. That will tell you what it's thinking. Now we could be very wrong, but it'll tell you what it's thinking. So. And in Brexit, the market was rallying for the week before. So hey, Brexit's going to fail, Brexit's going to. So the market thought that, and then they got like hit in the face by like a 2x4 ball. And you know, Trump wins, the same thing will happen. Also, if the election is contested, if it's like within like a tenth of a point or less than a tenth of a point, it's not clear who won one state, you know, the market will go crazy. It will not like that at all. So look for bad economic news after the election. This happened in 2012. Suddenly, like, things get way, way worse. They didn't really get way, way worse. They just like adjusted the figures upwards before the election to make things look good. And this happened in 2012, and I even wrote about it at the time. I said they're voting up the numbers. Wait till after the election, it's going to get much worse. Then all these horrible numbers came out after the election. And they just simply like, they put in an extra 50 here, and then they took the 50 out after the election. That's what, nothing really changed. So this game is being played to the hilt of this stuff. So the numbers, suddenly the economic numbers are going to look worse. And that doesn't mean they're really worse. They were bad already. So the Fed right now is on schedule to raise rates in December. They have a meeting right before the election. They wouldn't dare raise rates then. That would be considered blatantly political. They made tons of noises about they're going to raise rates in December. So that will hurt the markets also. That's not a plus. David said, like, it looks like the markets are going to go down. Well, here's the reasons the markets there'll be like news that drives them all. So currently, the big news this month, the U.S. dollar has been rallying, and the euro and pound have been really selling off. So, and a dollar rally holds the price of commodities down. So keep that in mind. And I actually wrote an article on Seeking Out about the pound dropping. The FTSE, which is the stock market, has been going up and up and up, but the pound has been going down and down and down. And if you adjust for the FTSE in currency, you find that hasn't changed at all. So if you're a dollar holder and you invested in it, you actually get no money. It looks like you're making money, but when you actually convert back to dollars, you're not getting any money. And I've even seen articles, oh, you should have invested in the FTSE, look how much money you can make. And they don't take into account this like currency difference. So it's like, God, people are idiots. So precious metals, we're going to see about it. They have had a sell-off, and David mentioned this, and they're trading right along their 200-day moving average, which is key support. And they've been doing this for weeks now. So this is like interesting. They're holding important support. Natural gas broke out, and I wrote an article, and then it like broke down. And I know why it broke out, I don't know why it broke down. So oil is trying to break out. This dollar rally is holding it down, though. So this is one reason it hasn't broken out. And you can't believe most of what you read about the oil market. And, you know, I write articles on it all the time to try and correct the record. There's a banking crisis in Europe. We've mentioned this 100 times. It's not going away. It's not been solved. There's going to have to be some big bailout, as David said, Deutsche Bank, probably Credit Suisse, the entire Italian banking system, which is completely bankrupt, insolvent. And like these banks, they're insolvent, but they just keep going along. And then, you know, the central bank is pumping enough money into them, which Japan did for years and years and years, to keep them operated. That doesn't mean they're actually real businesses. They're not. Deutsche Bank is beyond insolvent. And Italian banks, for years, they've been insolvent. So that can burst forth at any time. Like Deutsche Bank had to be bailed out or something. And Deutsche Bank holds trillions of dollars in derivatives. It is like a toxic waste dump in the financial markets that could just blow up. You could like be the Fukushima Daiichi of the financial market. Now, okay, the Dow, this is quite interesting. This is the 50-day moving average, this yellow line. Notice it has been trading right below that for weeks now, like 6 weeks now. And it goes up to it, goes down, it goes up to it, you know, it won't go down, it won't break through. So this is a market, and the RSI is around 50, MACD is around 0, the DMI is trendless. This is an indecisive market. It's waiting. It is waiting for the election. It is so obvious. We don't know, we don't want to do anything. This is like total indecision. And when the election comes, then they'll do something. So we will see. S&P looks exactly the same. The NASDAQ has been much stronger than the S&P and the Dow. And it's riding along this 50-day. And notice this blue line's about to cross, which would be a buy signal. If it falls down below that, generally you have to get to the blue line if you fall below the yellow. So, but the tech stocks have held up the best. But I think Amazon had bad earnings today. Does anyone just after the close? Yeah, and how much was it down?
I think it was down 4% or something.
Well,
Down to 7.7.
That's nothing. Maybe it'll be like much worse. So like these, that's in a bubble, right?
Yep.
Amazon.
All the FANG stocks, Facebook. And
Yeah, so like, and it had bad earnings, so like maybe this would start bursting back. So these indicators are pretty indecisive. Also, the Russell has fallen below that 50-day, and it's not riding it. It looks like it definitely wants to go down here. And these things are all indecisive. And we have like the U.S. stock market, just very like sitting there waiting. Foreign markets, FTSE, the FTSE had a big rally because we're going to see the pound. Like, the pound is going down just as much as the FTSE is going up. You average them, you get nothing. But you can't tell. So this is actually quite bullish. This blue line's above this, so stocks are doing well. But you know, you've got to take, if you're a dollar holder, you have to take the currency into account. And the currency is the mirror image. It's a disaster. Worse than it, it's a disaster. With the stocks are bullish. So you don't want to invest in any market where the currency is going down. The currency is bearish, but the stocks are bullish. You want them both to be bullish. And now one champion is Brazil this year. So this was bullish. This is actually, this rally is getting a little challenged down here. The buy signal fell apart. So we'll have to see. The DAX is like holding up, but the euro is also going down quite a bit. So it's a fake rally, basically. This is a very indecisive pattern, once again. Deutsche Bank is the insolvent bank. Deutsche Bank is a major international bank. It'd be like Citibank failing here and becoming insolvent. It's not a small problem. It has its tentacles in like the whole world. So it would damage the financial system. It could set up a whole new financial system. So you know, this got to somewhere above 10. This is, I think David showed the chart. It's actually below its credit crisis low in 2009, which is a sign of incredible weakness. Credit Suisse also, the Swiss bank also has the same problem. All the Italian banks have this problem. The Italian banks are, 3 of them are actually penny stocks. And like a penny stock means a stock that's, you know, if it actually had some value previously, it means it's going bankrupt or about to declare bankruptcy. And like this Monte dei Paschi, which is a 500-euro bank in Italy, actually went down to like 17 cents, 16 cents. And it went up 4 cents the other day, and there's like a certain percentage limit in the Italian market. They had to stop trading because it went up too high a percent. 4 cents made that too high. Yeah, it's like Italian comedy. It's like, and these banks just keep going on, and they keep operating. You know, we're living in this world that's also devoid of reality, the financial system. So this is also pretty indecisive looking. This is that bank that's just riding the bottom, basically. And then if like really something really bad happened, it would go below. The Nikkei has been sort of damaged. This is a very negative pattern because the red line's on top. The yellow line just crossed the blue line. That's the first sign something positive could be happening. But you need a lot more than that. And as we keep saying, the Nikkei peaked in 1989, which was like before that man was born over there. There's actually at least always one person in this room who was born after the Nikkei peaked. And maybe more than one. That's how long it is, and it's nowhere near its high. There's no one even remotely thinks it's going back to its high in any foreseeable future. So people say buy and hold, you'll get your money back. Well, if you're Japanese, you don't believe that. Wow, I was 20 when I bought it, I'm retired now. So beware, this is not always the truth. Okay, let's look at emerging markets. Brazil has been the big success story this year in the whole world. Not only has the market stocks had a huge rally, the currency is the #1 performing currency. So you get your returns are supercharged, hypercharged. You're getting returns for the currency and returns from the stock market. So this is still quite bullish. It's a little overdone. This is the ultimate sign of a long-term rally. So it's in great shape. This is a buy signal right here, so that's fine. This is above 50, which is bullish, above 0, which is bullish. So this chart looks quite strong. That doesn't mean it can't come, it needs to come back to this yellow line. At some point, it will come back to that blue line. That's still a valid rally. Nothing has changed. So the Shanghai, China is exactly the opposite. China's had 2 bubbles, as David pointed out. It's just like fumbling along the bottom. It definitely needs to go down in the future again. And then China's a mess. China is actually very much like the U.S. in the 1920s. The U.S. was a major manufacturing power with huge GDP growth, hard to imagine now. And the GDP growth was based on exports. The picture is very similar to China. And then, of course, 1929 came along in the 50-year depression. So, like, overextension can, like, in environments like that, can destroy everything. So this is just bumpering along, going over in particular. India, the Sensex was having a big rally. It's been bullish for a long time. It's riding along under that 50-day, just like the U.S. stocks. This is negative. This is negative. This is trendless. So that's like this rally is not how it's challenged at the moment. It could have a big drop. Russia had a big drop. Russia is a commodity-based country. It's extremely dependent on oil, but it produces more commodities than any other country on Earth. And it doesn't have a lot of manufacturing compared to other countries. Well, China is also doing it. China and India are also major commodity producers, but they are they consume most of the commodities. Russia actually can export. It doesn't do anything else. So this is sort of sideways moving here. All cases is sideways moving. So this will be dependent on oil rallying and other commodities. If commodities have a huge rally, which they will, they've started one. It may take a couple more years before it really gets started. Russia will do really, really well. So here's currencies. Currencies are the big picture. This is the dollar. There's all this talk, the dollar's rallying. I'm telling you the dollar's rallying. This is how much the dollar's rallied. These are other currencies that have rallied. The dollar's rallied over the years. It's actually been flat. The dollar's rallied in the last couple of months, 5%. But Brazil is up like almost 40% for the year. So compare that to like 0. I mean, how often do you hear Brazilian real? Wow, what a success story. No, you hear dollar. And like even this is the yen, the blue line, it's up 15%. And these are like the Norwegian krona, the Australian dollar, and what's the other one? The Canadian dollar. These are all commodities. Norway is dependent on oil. Australia, the Australian dollar trades with gold. And the Canadian dollar is a commodity-based economy. So these three are commodity-based. Brazil is also fairly a commodity-based economy. But it has special factors. Why it's going up, I have no idea. They impeached the president. It's a total mess. And like everything went to the sky. Here's the U.S. dollar. You see this is the rally everyone's talking about right here. You see the chart, so that yellow line is rising, which is quite bullish. First, it must pass this red line, which is not, that's the first sign of a rally. That's not happened yet. Then the blue line must go above the red line. And that's not happening. And there's big resistance at this 100 level. This red line here, that's major resistance. So it gets there, it's going to get stuck. It can't just like shoot past it. It's going to sort of be held down there. So this is extremely bullish, very strong trend. This is bullish. This is bullish. So the whole chart at the moment is bullish. Now Trump was elected, the dollar will go down. That was like it, not 10% like pounds overnight. So here's the euro. You see, it's just as the dollar went up. Let's look. See the dollar. Look at this. Memorize that. Is the euro going down by the same amount? It's like a mirror. You can put it in a mirror and you get the euro chart. So it's falling apart. It's down to 106, which is incredibly low for the euro. And it's down like around 104. If it breaks this level, it will go. For years, people have been waiting for it to go to 1 to 1. So it's getting close. It will happen. It will happen. We'll see. These seers will be correct. And it might go below 1 to 1. That's the. And 1 to 1 will be very strong support. But this is negative. This is negative. This is negative. So this whole chart's negative. And this can't go down forever. Maybe because it's getting too far away from these lines. But it could go back down and test that support around 105. And then go even lower. Here's the pound. This is what happened in Brexit. You see there's this huge gap. It just like dropped. The bottom just totally dropped out of it. But notice, and then it went sideways, but notice it's gone further down to 120. And it can continue. This chart's totally bearish. This is bearish. This actually went below 20, which is very bearish. This is below 0. This is on the sell signal. But there's nothing positive about it. The pound is in trouble. The Swiss franc, which is actually a valuable currency, is down to like 96 cents. That's very cheap. But it's like tied to the euro unofficially. It was officially for many years. So this is like a sell signal right now. And the euro is in big trouble. So we will go with the euro. So if you want to buy something after big sell, if you buy this Swiss franc. No, don't buy it. The Japanese yen has been extremely strong. It's a very bullish chart. Notice it's falling below this yellow line. It's got to get to this blue line at the very least. This is bearish. This is bearish. This black line crosses the blue line. It's bearish. It's sitting right on it. So this wants to go. This is trying to go down. Now it's had a huge rally during the year. So.
Daryl, do you have a chart of the Mexican peso?
No. If you request it ahead of time, I would like to.
I was just curious because it seems to be highly correlated to Trump.
Inversely correlated.
Yeah, inversely correlated.
I said, no, it shouldn't go up with Trump. No.
Inversely correlated.
Yes, if Trump is elected, the Mexican peso will collapse. The Mexican market
it's been quite strong over
short
the last
those two things if you think he's going to be elected. But they'll probably rally if Hillary's elected. So, like, you're playing a risk game, no matter what. There's a number of assets. If you sat down, you could find a number of assets. And, you know, coal and guns are like the Mexican anything would also be.
Long concrete, short things.
Well, yeah. How much? When would you build a wall at? Buy brick companies. I don't know who makes bricks. No, there are companies that make big construction material. If he's going to build some wall across half the United States, for God's sake, they'd be really bullish for those companies. So here's the Australian dollar. This is sort of going sideways. It will ultimately move with gold. All these things are sideways movements. Gold is going sideways right now too, also, so it will make sense. What happened? Okay, oil. I'm much more bullish on oil than David, and I write lots of articles about it. I think it's going to break out. The Middle East is actually at its capacity production, which no one tells you. You know, and they have increased production enormously since 2009 in the last like 7 years. And you hear, oh, U.S. fracking. Yeah, U.S. fracking increased production too, but the real glut actually came from Middle East production, and somehow that never gets reported in the press. And you just have to look at the numbers and go, oh. But they brought online also the very marginal oil that's difficult to produce. So this is not cheap oil. It's not $20 barrel oil. So, and they probably can't produce anymore at the moment. It usually takes several years to create the infrastructure to move higher.
But if demand is destroyed, you're right, it might be a capacity in terms of supply, but if demand is
No, demand is grown at incredible
right
rates.
through the recession.
Well, we actually, like, the demand has grown, demand is actually for oil has grown 1.6 million barrels a day since 2009 to 2000, each year. So the demand has skyrocketed. Cheap oil just makes that demand go even higher. So, but they can't even, they cannot even keep their production at the level it is. So you're going to see lots of things happen in oil next year, and eventually it will go much higher. And you have to read my commodity article I wrote today, seeking out the published. Maybe they censored that. I didn't mention any politician.
Yeah.
So, but
Why is it able to go much higher?
well, I've written that the demand actually keeps increasing at incredible rates. The supply is actually plateaued. So, you know, you can't just produce more and more and more oil. You have to have some mechanism for doing it. And there's no new big discoveries like there were in the 60s and 70s. What created the big glut in the 80s is North Sea oil came online, Alaska oil came online, Gulf of Mexico oil came on. These are massive, massive fields that produce huge amounts of oil. What the Saudis did this time, they had a field of oil that was contaminated with vanadium, which makes it, vanadium the mineral, which makes it toxic. So they had to build a plant to like get rid of the vanadium from the oil. Now this required technology, and it's very expensive to do this. Plus they had to create a huge infrastructure of bridges, roads, tanks, and a whole bunch of other stuff that cost billions of dollars. So you don't do this in like one day. This took years and years and years to get this done. And it's not cheap oil because you always have to process the vanadium. So that's one amount of oil. Another field was something that stopped producing in 1980, and how they managed to get oil out of it, they pumped water from the Persian Gulf. But first they have to desalinate that water, which requires lots of energy. And they have to pump it 60, 80 miles into the desert, and they put millions of gallons every day into this field to get oil to come up. So now you can't increase the supply constantly. There's a limit. They've reached that limit. They've reached the limit on the vanadium. And there's one other big field they brought online that is like in the middle of nowhere or something, that has some other serious problem. So like, that's it. You can't just, and oil, you go up like this and then you go down like that. So when you peak, you actually are facing a drop. So they're going to have less supply. And this is also happening in their neighbors. So the supply is actually going to go down, but demand has only decreased in oil 3 years since 1859. 3 years in 160 years. So it always goes, even in recessions it's good. So I mean, the supply-demand is like at a critical point. So you can actually get this explosive movement, and maybe next year the following, like a big move up, not $5, back to 100. So what is this? So oil, I'm waiting for it to work out, and they're willing to make a deal because Russia can't produce it, so they say, oh, let's put a ceiling. Oh, why won't we produce it anymore? Well, they can't produce it anymore. So what are they losing? It's like people say you can't trust them. Well, you can, but they can't do anything. So oil, this is like this chart, and David was correct. The oil chart actually was not nearly as bullish as the gold chart. We've now got this 50-day line across the 325-day. We call this the double golden cross. This is the first sign of a long, sustainable rally. It's finally happened in the last week or so. So we then need this blue line to cross that red line, and then that will be a rally that can last months and months and months and months and months, several years. So we are waiting for that to happen. So oil's getting a little low, and it's really basing. It's in this long basing period, which means sideways move. So natural gas this was a breakout, then it suddenly just broke down. So we'll wait to see what happens. Notice it hit, this is major support with this 200-day moving averages joining the 325 and went right down to that point. So as long as it stays above that, it's actually still in an uptrend. That is not in the uptrend, but maybe it will go over. have this one. This is bearish. This is sort of okay-ish. And this is like really, this is technically a sell signal. Precious metals, silver is doing better right now. Gold did better at first. Palladium is this blue line. Platinum is the laggard in the entire industry. Here's gold. Now here's this 200-day moving. I've noticed the price right along it. And it's all precious metal. The whole sector. You see this chart. It hit this 200-day and it's just right. And here this looks like a bottom was made here. This is a sell signal, but it turns down as weakening. You see gold miners have the same picture. You see silver. Silver is not riding along, it's riding above the line, which is actually a little more bullish. But that line is the key marker of where the price is. So let's look at bonds. I have something very obvious has happened, which David needs to know too. It looks like interest rates bottom throughout the world this July. There is a low in market after market after market after market in government bonds, not corporate bonds, not like. And you see this same low pattern. This is July. Interest rates hit a low, and then they started rising. This is the 30-year Treasury. The interest rates are bullish. They move in the opposite direction to the price of bonds. Remember that. So this looks like interest rates want to go higher, and the higher point would be the spread line for the moment. 10-year has the same picture. You see the same bottom in July. It's going above the 200-day, which for the moment is bullish. You still need this gold line to cross this first. This is bullish, bullish, bullish. So here's the 10-year German bond. It's moved above zero. It was negative for quite a while. It also hit a bottom in July. And now it's gone above zero. It's been unable to stay below zero. Which, of course, that does make sense. Let's think that one through. Here's the 10-year Japanese bond, which is still below zero, but it hit a bottom in July. So, and it got to zero, and then it fell down, and that's like right just below zero. But negative interest rates, as I said 1 million times, are theoretically impossible. They cannot exist, but they have. And that indicates that the market is so destroyed and skewed, the market mechanisms that correct things by central bank policy. So, but we see this bottom is happening everywhere in the world, and the Japanese bond is going to have to go above zero, too. High yield junk, this is a whole different, these are corporate bonds, and these are prices, these are not yields. So, these are the opposite. So, this is what caused, if you look at the left side of the chart, that big drop caused the stock market drop early in the year. And now they're high, and they notice something very weird about this chart. This is trendless. This is like, not really bullish, but look at the RSI. Notice it just rides this certain level around 65-ish. Usually the RSI goes up to 80, it goes down, or it goes down. It goes up and down a lot. It doesn't go like sideways like this for a long, long period of time. This is a very unusual pattern. It indicates like continual buying of a certain amount by a very big player. That's, we say Federal Reserve. You know, it'd have to be a central bank, or it can't be like a bank. You know, this market is being highly manipulated, and that's like some statistical proof of it. Bonds. Okay, well,
Hey Daryl, before you go on, to ask you one question on, have you done any, only one, the correlation between the 10-year or 30-year Treasury note or bond versus the stock market?
Lots of people have. When the bonds tend to start selling, price of bonds start selling off between a few months before the market starts selling off, and a year or so. And we know this low took place in the low interest rates at the peak in price. We know that happened in early July, so we're now in July, April, August, September, 4 months. So that's just about the right time where a stock market drop would start. That's a very good one. You would get an A+. I used to teach I used to give students A++ and F-. They were really bad, they got an F-. Really good, they got an A+. And people in this room can tell you. So copper, David said copper is the one commodity that's most tied to the economy of the market, the economy of the whole world, especially manufacturing economy. And that's been dead in the water for years. It's not rallying, it's just going sideways, it's slowly going down, for many, many year period. And this is like, this is not good, this is a mediocre. And this is something that can't maintain a rally. It's not really selling off, it's not rallying. It's just like it's there, doing nothing. It's not a good indication for the state of the global economy. Coffee has started to rally, we've talked about it forever, maybe like decades, I don't know how long it's been. You know, this is extremely bullish. This blue line plus this red line, which indicates a long-term rally, has started. So that's good. This is bullish, and this is a buy signal taking place. This is trying to go to a buy signal, it actually went into a buy signal. So coffee's high on this ETF several years ago was 80, and it's still only at 23. So one day it will go back to 80. So it's suddenly, after a long, long time, it's suddenly starting to turn bullish. Sugar is the most bullish commodity, agricultural commodity of all. And it's like, already had a big rally. There's an extremely bullish pattern. Here it's right now, it's just resting. This is bullish. This was a buy signal and maybe another buy signal. So this can come down, keep in mind, always you can come down to this blue line. And even this red line, and you have not destroyed the uptrend. So there's a lot of room. And sugar is a very volatile commodity. Cotton also had a huge round, shot up out of nowhere. These are the two big success stories, and now coffee and agriculture. Agriculture is lagging the rest of the other commodities in general. So notice it stayed at this 50-day. This blue line is crossing the red line, which is a good sign. This is actually indecisive, and this whole pattern is indecisive. So it's looking to reset either up or down. And so it could reset up and then it just keep rising. So we have to wait to see which way it goes. Okay, that's it.